Welcome back to The Deep Dive, here with Talk Tickers, and today we're looking at a company that is, well, it's not quite a bank, and it's not quite a tech company. It's something else entirely.
It is definitely one of the weirder ones we cover. We're talking about GBank Financial Holdings, ticker GBFH. They just had their Q4 2025 earnings call on Monday.
And just to set the stage for you, this is not your typical regional bank. I mean, on one hand, yeah, they do standard SBA loans, boring, but profitable.
Right.
But on the other hand, they're trying to be the digital wallet for the entire gambling world, fighting off armies of bots and hiring Mike Tyson for their marketing.
It's a real mullet of a business model.
Yeah.
You know, business in the front, high-risk fintech party in the back.
So let's get right to it. The earnings came out. The stock, it didn't exactly fall off a cliff, but it definitely stumbled.
Yeah, it closed steady after hours. But then the next day, it dropped about 4.1%, down to around 31.96. The market was not pleased.
So what's the takeaway here? What's the mood?
The mood is show me. That's really the only way to put it. Management gets on the call and claims victory, record revenue, fixed all the internal problems.
But investors weren't buying it.
They looked at the one thing they really care about, that hyper-growth credit card engine, and they saw it had just stopped.
Okay, stopped or just paused? Because there's a big difference.
Intentionally idled is the term they used. And that's the whole question we have to dig into. Was this a strategic pit stop, or is the engine fundamentally broken?
All right, before we get into the drama, let's just do the numbers. Give us the report card.
Okay, so if you just look at the raw fundamentals, the bank is actually very healthy. They had record net revenue, $20.7 million. That's up 2.7% quarter over quarter.
Record revenue sounds good.
It is.
Yeah.
And their profitability is, honestly, it's kind of absurd for a regional bank. Their return on average assets, or ROAA, was 2.2%.
Okay, for anyone who's not a bank analyst, put that in context. Is 2.2% a big deal?
It's a huge deal. Most banks they'd kill to get over 1%. So GBFH is basically twice as profitable as the bank down your street. They are squeezing every last drop of profit out of their assets.
Then why the sell-off? If they're that good, why did the stock drop?
It's the expectations game. They missed the consensus earnings per share number by a single penny. JAP EPS was 51 cents. The street wanted 52.
A penny. A 4% drop over 1 cent? That seems extreme.
Well, it's not really about the penny itself. The penny is just the symptom. The disease, or at least the market's fear, was why they missed. It was because the tech story, the growth story, just flatlined.
Which brings us to the craziest part of the call, this fintech reset. The CEO, Ed Negro, he just comes out and admits they had to slam on the brakes.
He did. He called it a perfect storm of fraud, and honestly, the details are pretty shocking.
Yeah, walk us through this, because usually fraud means, a few bad apples. This sounded more like an invasion.
It really was. So here's what happened. They had this automated app process that was, let's just say, a little too easy to get through. At the exact same time, they sent out a 700,000-piece direct mail campaign.
So they basically rang the dinner bell and left the front door wide open.
Exactly. They were flooded, and they thought, great, look at all these new customers. But it turns out a massive number of them weren't people at all. They were bots.
So what did they do?
They did something really drastic. They shut the whole thing down. The entire application portal was offline until late October while they rebuilt it from the ground up with tech from Plaid and NeuroID, the whole 9 yards.
And this is where that one stat just blew my mind. Negro talked about Martin Luther King weekend. You have to repeat that number.
It's staggering. So over that weekend, they received 10,000 applications for the credit card.
10,000? That sounds like a huge success.
You'd think so. But the new security system went through all 10,000 of them. Guess how many were actual human beings who got approved?
I know the answer, and it's still hard to believe.
6.
6.
Yeah.
As in SIX.
6. The other 9,994 were identified as bots, fraud, or synthetic identities.
That's terrifying. That's like the dead internet theory playing out in a bank's quarterly report. If 99.9% of your potential customers are fake, how do you even operate?
That's the billion-dollar question.
Yeah.
Now, to be fair, Negro stunned this as a huge win. He said not one fraud has gotten through in the last 60 days. He's proud of the new firewall.
I get being part of the firewall, but if your marketing brings in 10,000 bots and only 6 real people, isn't your marketing just broken?
It's a fair point. And it's why transaction volume flattened out at around $99 million, down from peaks of over $130 million. But Negro's argument is that the $130 million was dirty volume. This $99 million is clean. Now they can turn the marketing hose back on.
And speaking of marketing, Mike Tyson. Really?
Yep, they're launching a new campaign featuring Mike Tyson.
I have to ask, for a bank, a regulated financial institution, isn't that a little out there?
It is a very bold choice, but it tells you exactly who they're going after. This isn't for your grandma. They are targeting the young male sports betting demographic. It's a high-risk, high-reward move.
But even if Tyson brings in the right people, there's another headwind, right? The biggest sports books, DraftKings and FanDuel, they're not even taking credit cards directly anymore.
This is a huge deal. States like Massachusetts and Iowa are cracking down, so the big players are backing away from direct credit card funding.
So if your whole card is for gamers and the biggest games stop taking your card, isn't that game over?
It sounds like it, and that's the bear case, for sure. But Negro has this counter-argument he calls the migration of liquidity.
Explain that one.
He says, look, there are like 28 legal sports betting apps out there. If a gambler can't use his card on FanDuel, he doesn't just stop gambling. He just opens up the BetMGM app or Caesars or one of the 20 other apps that still work.
The money just finds a different path.
Exactly. He's betting that consumer habit is stronger than any single company's policy change.
It's a bold bet, which I guess leads us to bold bets, which is literally the name of their next big thing. This part of the call felt like a history lesson.
It really was. And you have to understand this history to get the bull case. Negro started way back with the coin in, coin out days in casinos.
The bucket of quarters.
Right. And he told this great story about Steve Wynn piping in the recorded sound of coins clanking around just to create excitement on the casino floor.
That's amazing.
Then came the paper tickets. Tito, ticket in, ticket out. Everyone said players would hate it, but it took over because it was just more efficient for the casino.
And Negro's point is that we're at the next step, the death of the paper ticket.
The move to a digital wallet. That's bold bets.
Yeah.
They got their license in Nevada in November.
So how does it actually work? Is it just like Venmo for a slot machine?
It's deeper than that. It's a pool player account. When you load $100 onto the app, the casino never touches that money. GBank holds it in a subledger.
And why would a casino want that?
Because casinos hate cash. It's a massive liability. You have to count it, guard it, move it in armored trucks. It's a huge expense. This model lets them offload all that risk. GBFH essentially holds the float.
The float?
Yeah, just think about all the cash sitting inside slot machines across the country right now, just dead money. If they can get that money into their digital wallets, it becomes low-cost deposits on their balance sheet. That's the holy grail for a bank.
They're trying to become the Federal Reserve of the casino floor.
That's the big picture dream, yeah.
Okay, let's switch gears. That's the sexy high-tech stuff. What about the boring part of the bank? The SBA lending that actually pays the bills, that looked a little weak in Q4 too.
It was a weird quarter for them there, for sure. New loan originations were way down, only $118 million compared to over $200 million the quarter before.
Why such a big drop?
The government shutdown scare back in October and November.
Oh, right. I forgot about that.
Yeah, it basically froze the whole system. But, and this is the key part, while the volume of new loans went down, the profitability on the loans they sold went way up.
I saw that, the gain on sale margin. What exactly is that?
Okay, so when they make one of these government-backed loans, they immediately sell off the guaranteed part to investors. The gain on sale is the profit they make on that flip.
And that profit margin jumped.
Yeah, up to almost 4%.
Yeah.
And it wasn't an accident. Negro changed how he pays his loan officers. They used to get paid on volume. Just bring in deals. Now they get paid on the profitability, on the interest rate spread.
So it's quality over quantity.
Precisely. It's a much smarter, more sustainable way to run that business.
But what about the risk? The bears always talk about their hotel concentration. They make a ton of loans to hotels.
He came out swinging on that one. He said since 2015, they've made over 1,000 of these loans. Total defaults, 12.
12 out of 1,000, that's nothing.
It's incredibly low. And the total money they've actually lost after liquidating the assets is only $2.8 million on billions in volume. His point is, even if a borrower defaults, we get the hotel. It's a hard asset.
So let's bring it all together. You have a very profitable bank that just cleaned up a massive fraud problem. They're sitting on potentially game-changing tech, but the stock is down.
It's impatience. Simple as that. The market looked at the flat transaction volumes and said, we'll believe it when we see it. Even Jones Trading cut their price target to $50.
Which is still a buy, but it's a signal.
It's a signal, that the timeline just got longer.
Yeah.
This is an execution story now. The market is saying, prove it.
But in the penalty box.
Exactly. And they'll stay there until the volume starts growing again.
All right, that brings us to our final segment where we look at the future through let's call it a speculative lens.
And let's get the big disclaimer out of the way.
Yeah.
What we're about to say is for entertainment only. This is absolutely not financial advice. Please do not trade based on this conversation.
Go in clear. Okay, what's the trade?
The trade is what I'm calling the cashless casino float squeeze.
Oh, I'm intrigued.
It's a pair trade. You go long GBFH, and you short what I'll call the cash logistics basket.
And what's in that basket?
Think about it. Brinks, Loomis, the guys who drive the armored trucks, the companies that make the special paper for the TITO tickets, the firms that service the cash validators in the machines.
You're shorting the entire physical infrastructure of cash?
You are betting on technological obsolescence. Negro's entire thesis is that cash on the casino floor is a dying technology.
Yeah.
If he's right, and that float moves from the slot machine to GBFH's balance sheet,
Then the armored trucks stop showing up, the ticket printers go quiet.
it's a direct transfer of value from the old world to the new one. And GBFH captures all of it in the form of cheap deposits. It's a bet on the digitization of the last bastion of cash.
It's a classic buggy whip trade. Short the buggy whip makers, buy Ford.
Precisely. But, the key is always timing. It could take a while.
And that timing might just depend on whether Mike Tyson is a good pitchman.
It's a wild world.
It certainly is. So that's the story on GBank Financial Holdings. A great housekeeping quarter, but the stock is waiting for proof.
All eyes are on Q1 2026. The excuses are all gone. Now it's time to deliver.
We will be watching. Thanks for listening to The Deep Dive. Do your own homework, and we'll see you for the next one.